Good evening, everyone. We'll just wait for everyone to join in. Good evening, everyone. Let's wait for 1 minute. Let everyone join in. Yes, friends, I think. Good evening, Rahul. Good evening, everyone. Let me open the. How was the exam, friends? Please share your comments on it. Good evening, Kylebiri. Medium to easy. That's good. It was good, Shivani. Friends, we are doing 3 mock tests over here. All right. The objective is, yes, tell me.
Good evening, sir.
Good evening, Ramya. Okay. Friends, the objective is that you sit, write an exam at a stretch, and try to score best marks in the exam itself. Worst scenario, the paper might be difficult for you, but understand one thing. Today is April 8th. Your exams are going to happen in May. So you have a month's time to correct all the areas where you actually went wrong. Am I right? So these exams will actually give you very good exposure. Don't bother about how much marks you're going to get here, but what's important here is that you attack the paper. That itself takes you one step ahead. All right, friends. There were some tricky subparts. Is it Guru Nirupama? All right. I'll just open the suggested answer now. I'm not sure if the answers have been given to you. I don't think so. I'll just open the suggested answer. And friends, what I will do is I will be taking I'll go live on the app. Yes, for those students who haven't written the test, maybe because you were not a part of the mentoring batch, you can always join the mentoring batch, friends. You have to just join my app. And after joining my app, you are supposed to go and register in this place. Okay. AFM mentoring is the name. So we have a few joining requests. Let me accept them. Okay. Now let me go to the assignment part. Friends, we had done MCQs also, which also you can write down. I think there are around 6 tests that we have given over here. Out of that, business valuation, everything is over. Only advanced capital budgeting is pending. These are all MCQs. So please do try these also. I will upload the answer, Aishwarya. Don't worry, I'll do it. Let us first discuss what we have done. Let me go back. Okay, where is the assignment? It's here. Okay, you have mock test 1 is done. Mock test 2 and mock test 3 are upcoming. I'll click on mock test number 1. And let us see how many students have actually submitted it. Friends, 24 students out of 600 people who have enrolled for the mentoring. 24 students have actually written the test. I should give you all a big clap and hats off to you that you have taken yourself one step forward. Friends, whether your marks are good or bad is second. You went, you attempted this paper on your own. That itself requires a lot of courage. Hats off to all of you. That shows that you are halfway through for the upcoming examination. Others, please make sure that you write down the test at the earliest. I know some students have messaged me that they were having office, they were having some other test. Multiple reasons were there, but please give it a priority and do it today, night, tomorrow, or at the earliest in this week itself. Don't delay it anymore further. All right. I'll take up one of the answer sheets from here of anybody who's actually live so that I can cross check the answers with them. Let me take Aishwarya as Pi. Are you there live? I think you just sent me a message right now, correct? Aishwarya, are you there? Please tell me a hi. Aishwarya is not there. She's there. Aishwarya, are you there? Can you hear me? Or are you traveling somewhere? Okay, let me catch somebody else who's live right now and who has submitted the paper. Let me take the next person randomly. Kritika, are you there? No, Kritika is not there. Monica. Yes, Monica, can you please unmute and tell me a hi?
Hi, sir.
Hi. Okay. Aishwarya, you are not Aishwarya as Pi, is it? That's okay. Aishwarya as you need not be Aishwarya as Pi. Okay, so then the answer paper I'll be checking will be of somebody else's. Monica, are you the same Monica that I see on the screen?
Yes, sir.
Okay, can I take your answer sheet for a valuation purpose?
Yeah, sir. But I didn't write the theory part. I
That's
didn't
okay.
read.
That's okay. That's
Okay.
okay. The focus is more on the problem part right now. So I will take your answer paper. All right.
Okay.
Fantastic. So friends, I'm going to correct her paper now. You parallelly correct your paper live so that you understand how you will be allotted marks in the examination. Okay. Fantastic. For mock test number 1, question number 1A. Let me just open everything ready over here. So this is the suggested answer, is it? Okay. Wait. Oh, so I have opened the suggested answer twice by mistake. I need to open the question paper also. I will upload just at the end. Remind me to upload this. I will upload it for all of you. Okay. Yes, here we have a question. So, friends, the first question is actually similar to the question that I did in my class with the name of Mark Limited, Mask Limited. Online students who have, any of my fast track or online students, you will be familiar with this problem, is what I understand. Okay, so in this question, the answer they have given over here is first one, they have got the market price as 250, 160. EPS after merger is turning out to be 40. Impact of merger on EPS is nil. Both the profit are having no gain, no loss. And the gain from the merger, if the exchange ratio is 1 to 1, is turning out to be 68.56 rupees per share. That if you multiply with the number of shares, you will get the total market value. Gain or loss from mergers to the shareholders of KPS will be MPS after merger minus MPS before merger. Also, here you are having a loss for the second company. That is, sorry, for the first company, there is a loss. All right, next one. Maximum exchange ratio that is possible over here will be based on the market price. So you get the answer as 5.6 is to 8. These are the answers. Now, Monica, I'll take your answer sheet and we'll discuss the answers one by one. Okay. So, Monica, you've got the exchange ratio as 0.7 is to 1. Equity shares outstanding. Monica, see, there's one concern here. You have done equity share outstanding. You have not written full. You have only written
Okay,
outstanding.
sir.
Okay, so just correct that part. All right.
Okay.
Next, EPS is given as 40, 28. MPS is given PE ratio. Close the bracket here. All right. And you've got the
Hmm.
PAT for both the companies. EPS after merger is PAT after merger divided by number of shares after merger. You've got the answer as 40. And I believe that's the same number they have also got over here. So your answer is correct. Okay, can I go to the next part? So you can give yourself full marks over here. You have written neatly working note 2. You have given a heading and you have got 40 rupees per share. Number of shares will be 20 lakhs plus 8 lakh into 0.7, that is 25 lakhs 60,000. So you have given workings for that also. Okay. Here, Monica, you haven't given a heading as to how you
Hmm.
got this answer. Okay. So you got EPS before merger as 40 and 28. EPS after merger is 40 and 40. So there is no gain or loss for KPMS, but 12 rupees per share. I think that's the same answer they have got here also. Am I right?
No, sir.
They have got nil and nil. So they have made some mistake over here.
Yeah.
Monica, in my class,
No,
I
sir. No, sir. I'm the one who.
come again.
No, sir. I'm the one who did the mistake. I take the value per share. I didn't find it with the number of shares.
Okay, okay, fine.
I need to
So
multiply the EPS with the number of shares.
exactly, you should multiply with the number of shares to get the total earnings. That's how I did in my class
Yeah.
also. Correct? Okay.
Yes.
So that way it becomes very easy. However you go, you will not go wrong because you did on a per share basis. You would have got confused between the pre-merger EPS, post-merger EPS, etc., etc. Am I right? Okay.
Yes. Yes.
Perfect. Perfect. So here you will have to cut your marks. I will tell you how the mark distribution will happen. How much marks was the first question? 8 marks, correct? See
For
how
8 marks.
many requirements are there? You are having 4 requirements. So ideally it will be 2 marks per requirement. Okay. So here the first requirement is impact on merger on EPS of both the companies. So you got the post-merger EPS. That part is correct. Give yourself 1 mark for that. You got this gain or loss, which is wrong. Okay. So I think here gain from the merger for BRB, you can do it based on 2 things, based on market price also, based on EPS also. So based on EPS, you've got the answer incorrect. So you deduct 2 marks over there. All right. Next one, exchange ratio is 1:1. PE ratio is given. You get 42.67 rupees per share. Is that the next part of question 1 itself? Why have you written working
Yes,
note
sir.
2 twice? You already have a working note 2 over here, correct?
Yes, sir.
So you cannot write down that twice. All right. Let me just check if
Okay.
42.67 is correct. EPS is 36.57, Monica. You have got this number also incorrect. Total profit is 102 lakh 40,000. 1 minute. Correct. Divided by number of shares, you got 24 lakh, but actually it is 28 lakhs. So you have made a mistake there.
Okay. Okay. Yeah, sir. 1:1. I take that divided by 2. That's
Okay.
my mistake. I didn't read the question properly.
Fine. So the moment this goes wrong, even the next working note goes wrong.
Yeah. Yes, sir.
That's okay. So you do one thing, give yourself 2 marks for this question out of 8. All right. Then
Okay.
there's one more requirement, is that maximum exchange rate. So you got 28:40. That part, I think you got it correct, right? 0.7:1. Let's cross
Yes, sir.
check. Okay, so the last requirement you have got it correct. But actually, the volume wise, if you see, last requirement is a smaller requirement, and the first one is also a smaller requirement. Do one thing, give yourself 3 out of 8. Okay. All right. Others also, please give yourself marks based on this. If you have any doubts, you can ask me now.
Sir, the ratio, the ideal ratio should be 0.7:1 based on EPS only, no, sir?
Correct.
Oh. In calculating the gain or
Hold on,
loss,
hold on.
sir.
Ideal ratio means you're talking about the maximum exchange ratio, correct?
Yes, sir.
Yeah, that is 0.7:1. That's the highest number.
Sir, and in calculation of the gain or loss, you
Yeah.
should do it based on market value as well as EPS, no, sir, for that 1:1.
Yes, correct.
Okay. Because in the, I think in the suggested solution only based on EPS they have given. And should it be?
I think they have done it based on market value also. MPS of share 228, MPS before merger is 250. So there's a loss happening due to merger.
Yes, sir.
21.44. They have done only for one company. Ideally, you should do it based on market value. That is a better presentation. Okay.
Okay, sir.
All right. So you can do based on both gain based on earnings also and the gain based on market value also. You can do it based on both. All right.
Okay.
All right. Fine.
So the last part, no, sir, where they
Yes.
ask the maximum exchange ratio, is it based on EPS or MPS, sir?
Which one?
The last unit, the fifth part.
The maximum exchange ratio means when you look at the ratios, which is giving you a highest ratio.
Okay.
So when you do 0.7:1, is I assume it to be the highest ratio compared to all the parameters available over there.
Okay, that's based on EPS only, no, sir?
So here it's based on EPS.
Okay, sir.
If the ratio was highest for MPS, then MPS ratio would have been taken over here.
So basically, if they ask MPS, it's based on see maximum ratio. It will be based on MPS or EPS, whichever is higher.
Exactly. That's called as maximum exchange ratio.
Okay, sir. Thank you, sir.
Yes. Aishwarya, I believe I
Sir, the
already told you
ratio
you have to
should
give 2
be.
marks each. Yes, tell me.
So the ratio should be taken from the point of view of BRS limited, sir.
Ratio of the
That
acquiring
maximum
company.
exchange ratio.
The acquiring company.
So the acquiring company will like to give them a minimum number of shares to the
Yes, but
acquired company.
when you use the word maximum exchange ratio, what do you mean is that what is the maximum number of shares that you are going to offer to them?
Okay.
All right. Friends,
Sir.
1 minute here, the AC is not working. I'll just.
Sir, for the
Yeah. Yes, tell me.
sir,
Sir,
for the
instead of
maximum
writing-
and minimum exchange ratio,
Uh-huh.
like for whatever they're giving, like maximum or minimum, we have to calculate both based on MPS and EPS, and whichever is maximum and minimum, we have to just quote the value. Is that
Yes,
correct, sir?
that's it. That's called as maximum exchange ratio. Correct.
If it is minimum
Sir.
means you have to calculate both the ratios, and whatever is minimum, you have to quote the minimum ratio.
Yes, correct.
It will be the same answer will be for both the perspectives of the acquirer and the target company.
Why would it be the same answer?
No, I'm just asking, like, if they are asking minimum exchange ratio from the point of view of target or acquirer, will that be is the method same, like you have to value
Well, it's
both based
always
on
from the acquiring company's point of view. It's always like that.
even for the minimum exchange ratio, because I remember seeing some like for the target company also. I'm just confused. So
No,
just-
that
I'm
they're
just
saying from a perspective of target company, which is better, is what they'll be asking. This question is not about that. This question is only asking.
No, I'm not about this question. In general, I'm just
Generally, they can ask you that from a target company's perspective, which is better. So target company would always prefer going for a higher ratio. They want to get more number of shares. See, when you have a target company in line, okay, this target company would always prefer getting more shares for the every number of
Okay.
shares that they're offering. If they're offering 10 shares, they would prefer getting 8. Whereas the acquiring company would like to give a lesser number of shares.
So minimum exchange ratio for a target company will be correct.
Ex-
So the minimum ratio for a target company would be the target company. Is that right?
Minimum exchange ratio for the target company will be. Your voice is breaking, Aditya. Wait. Your voice is breaking. Sorry. I cannot hear you. Just mute yourself.
The maximum
I cannot hear
ratio
you.
for the acquirer.
Aditya, I cannot hear
Am I
you.
audible now, sir?
No. You're not audible. You're not audible.
Are you audible, sir?
Your voice is breaking. Please speak again.
No, sir.
Now it's better. Tell me.
Yes, sir. The maximum exchange ratio for the acquired company will be the minimum exchange ratio for the target company, because
No.
minimum. It's not like that.
No, not like that. Okay, so we are diverting from the topic right now, but I'll just explain to you. If the exchange ratio is 8:10 compared to 5:10, 8:10 will be the maximum exchange ratio.
Okay.
5:10 will be your minimum exchange ratio.
Okay.
All right.
Okay, sir.
Now that's from both big or small. It's the same. Okay.
Okay.
For target and
Okay,
acquiring
sir.
both, it will be the same thing. All right. Okay.
Done.
Fine. I'm going to the second question now, friends. Question 1A is over. Let's go to question number 1B. Friends, hold on. Okay. Friends, question number 1B. It is about importing a machine from USA having a cost of $15,000. Okay, this question is exactly similar to a problem that is there in your Forex study material. I hope you are familiar with this one session. Vinita, yes, the recordings will be available until tomorrow. It will be available, Vinita. Okay, 24 hours, I'll keep it live. Because afterwards, then people will just not watch it. So it's better to keep it for a limited time frame. Okay. Okay. So this question, friends, we have already done in my class. It's a routine question which keeps coming in the examination. But what I did in my regular class and in my crash classes, the numbers were different. All right. So here, let's check how Monica has done it. Basic data, amount required, interest rate, letter of credit. Monica, if you can put some alphabets over here, like, if you can put A, B, C, D, etc., it will be much better. All right. Yes.
Okay.
Yeah, tell me.
Yes, sir. Yes, sir.
Okay, fine. So option 1, borrow at 19%. So the amount required is given over here. Add interest rate. So you get 12,31,875. Let's just cross check with the solution over here. 12,34,000. So you take the loan, you have to add 4.75 for the first quarter, 4.75 for the second quarter. Total will be 12,34,000. Let's cross check the answer. Monica, you've got a slightly different answer because I think you've taken the interest for the whole year. Ideally, it should be taken for every 6 months compounding. 4.75 and then again 4.75.
For compounding, sir.
You forgot to do
I
compounding.
take the
correct?
interest as 9.5 whole. Yes,
Okay.
I forget to compound.
So you have forgotten to compound. So do one thing. What to do? How many
Hmm.
marks are there for this question?
Sir, I think I will get a minimum mark of 10.
Let's say it's a 6 mark problem. You are having 2 requirements. So out of that 6 marks, you can deduct. Let's deduct a bit strictly. Let's deduct 2 marks over here. Okay.
Yes, sir.
Let's go to the next part. Next one, you have got foreign branch offer. 11,25,000 is there. 11,250 is the interest. So you get 11,36,250. Let us check here. We have got 11,250. That is the letter of credit charges. 15,150 will be the interest. 11,66. 11,25,000. How did you get? You converted spot. Again, that's incorrect, Monica.
Hmm.
You are supposed to, take the loan in dollar, pay interest in dollar, and only then you're supposed to convert. All right? Fine.
But that one is Indian branch only. Yes, sir.
No, it's a foreign branch offer, option 2.
Now for option 2, the foreign branches in India, like
No. They are not in India. Then why will they require a letter of credit? Should read the question once again. I'll show you. There is an offer from the New York branch of an Indian bank. So the bank is Indian based, but the branch is New York branch.
okay.
So the interest you're paying in New York, you're not paying in India.
Okay. Sir.
I think if these two have gone wrong, you've lost the whole control over this question. You can
Yes.
give 0 marks for this, Monica. No worries. Okay, just put it 0. Okay. Others, please cross check your answers. First one, you get 12,34,414. Second one, you get the answer as 11,78,869.
Sir, for the letter of credit also, we should do compounding, no, sir, like 19%.
Letter of credit also you should do compounding, correct? But they have not done
Okay.
compounding over here, right? You do it in
Yeah, but
any
still
other
the
method.
difference is very meager, sir.
That's
It's
okay.
coming very less.
Ideally, you should do compounding. Okay.
Okay, sir.
All right. Fine, friends. Can I go to the next part now? Wait, there is a
Sir,
message.
how much should we give for this part, sir? Option 2?
Ideally, 2
Okay.
questions are there and 6 marks. So it's 3 marks each. 3 marks per
Okay.
requirement. Okay.
Okay.
Yes.
Sir,
So
Yes. Tell me.
Can you take
so
any
why
other
are we doing
questions? Any other answer sheet, sir? Because I think I did all the questions wrong.
You want to take somebody else's answer paper?
Yes,
Excuse me,
sir.
sir.
I'm getting embarrassed.
That's okay, Monica. You don't have to worry about it. See, others, how many people would have made mistakes there? They only know it.
excuse me,
Okay.
sir.
Okay.
Yes. Tell me.
Sir, we have to. Why are we doing interest for 180 days for this LUT commission? Why are we doing
Okay.
it?
Because the question is very clearly mentioned 180 days. Am I right?
Of course, they have mentioned. Then why are we are paying the commission before and itself, right?
We are paying the commission.
Before itself, right? Why do we need to pay interest?
Hold on. Okay, we are paying it upfront. Because we are paying it upfront, I don't have money with me right now. If I had money with me, I wouldn't have, taken all these loans. Correct? So even though I'm paying it now, ideally what's happening is I will be taking a loan for this money and paying interest on that.
Okay.
That
Even
is the
the
reason.
commissioner's loan. Okay, sir.
Commission also you're
I
paying by
didn't.
taking a loan and paying at the end of 180 days.
Okay, sir. I didn't do that part at all.
Okay, fine. So for that one part alone, you can cut 1 mark.
Okay.
so the interest part, sir, should we
Yeah.
do compounding or normal way, sir? Either way, it's fine.
Interest part, ideally you should do compounding. But in your
No, only for the
suggested, they have done it
commission part
using.
which they have taken.
Come again?
Only for the 2% commission part, sir. Commission
Commission
charges.
part also ideally compounding should happen because the bank's rule will be the same for all the loans, correct?
Okay, sir.
Yeah, but that's in textbook, they have done it with no compounding. You can stick to that. That's okay. All right.
Okay.
But there's no compounding for the newer interest now, sir.
There is that is because that's in a different bank. It's in a New York
Ah.
branch.
Okay, yes.
Yeah. Kevin, rounding off is okay. You will get full marks. Can LOC charges should also be compounded? Yes, it should be compounded. Monica, what should I do now?
So the answer for the third requirement, sir.
Okay, we'll go. Is there one more requirement? Okay, based on the present market condition, companies have to take the risk of currency hedge with an additional precision. Okay, so they're asking that if they're asking that they don't want to go with hedging with 30,000, what is the answer? Ideally, the answer should be if your benefit is more than 30, you should go for hedging, or you don't have to go for hedging. The solution they have given over here is that if the company is not interested to take the risk of fluctuation and want to hedge, then it can do so because then it can sleep peacefully. That is the ultimate objectives that they are giving over here. Okay, right. Okay.
Sir, how many marks for the
Sir.
second part? Sir? The
Okay,
second
wait,
part,
wait.
second part.
Hold on. Total is 3 marks, 6 marks, right? In total, do one thing. Give yourself first requirement that first you make the loan repayment in India. For that, you give 2 marks. Loan repayment in Japan, another 2 marks. Total becomes 6 marks, right? And then for the last requirement, give another 2 marks. Like that, you make it 6 marks. All right.
So the third requirement not able to understand, sir. Where should we put that additional expense of 30,000?
That is for the purpose of hedging. So if you pay an extra 30,000, then you don't have to take any risk of the exchange fluctuation. You will get fixed money. You can sleep peacefully.
Okay.
Are you getting my point? So what they're trying to tell you is that if you benefit is more than 30,000, or if you want to sleep peacefully, you will not worry about 30,000. You will end up paying that money.
Okay.
Right? So it's the person's preference being honest over here.
Okay.
Okay.
Fine. So it's not a quantitative answer thing.
It is actually not a quantitative answer. Correct.
Okay.
Sir.
Yes, tell me.
So if they want to compete for third requirement,
Okay.
I should just multiply with the forward rate, then add the expense like that.
But have they given the forward rate? They have given the forward rate as 77 over here, correct?
Yes.
Let's check the solution. Okay. So here they have not given any workings as such. They just told that if the company is not interested to take the risk and wants to hedge, they can do so by taking forward. Yes, exactly. Or if you want to put it in your terms, you can take the rate of 77 rupees per dollar and you can do a calculation.
Then I'll add 30,000.
Then reduce 30,000. With 30,000 is an expenditure. Oh yes, add 30,000. Correct. Add 30,000.
Okay, sir. Thank you.
Okay, thank you.
So
Sir,
30,000 is
should we simply
expenditure
add?
only, no, sir?
30,000 is expenditure, so we are supposed to add it. It's an
But
outflow,
this
right?
is a
Sir,
risk. Okay, outflow.
It's a
Okay.
payable, right? Is importing a machine,
Sir,
correct?
Yes, sir. Yes,
Yes.
it's a
should we
payable.
simply add 30,000 to the previous answer and tell that it is better than the previous question as well?
See, actually, that's not the answer. The answer should be, are you looking to hedge? Do you want to sleep peacefully? Because we don't know what will be the rate after 180 days, correct?
Correct.
We don't know that. If we really know the rate, suppose we know the rate is going to be 81 or 70, then you can take a decision that forward hedging is better. But the actual rate after 6 months, you will come to know only at the end of 6 months. You will not come to know now.
Yeah.
Correct.
So it will be just a theoretical answer.
It's a theoretical answer that you can give over here. Exactly.
Yes, sir. But 2 marks for that last requirement, sir.
They give, it's a theory, right? You should write it in a very neat and elaborate manner. Okay.
Done, sir.
Sir, if they are given the spot rate after 180 days, what should we do?
If they
Like,
give, then you can compare. Then you can tell how much money I will pay at the spot rate, how much money I will pay at the forward rate, and which is better.
Okay, I did that amount payable. In the first requirement, we chose option 2. So
Okay.
that amount payable plus 30,000, I found out the forward rate for that amount and put the answer.
But from where you got the S1?
S1, I got it from the first requirement and added the 30,000 additional
But first
expenses.
requirement 75 is S0, it is not S1.
No, for forward rate, we know that the amount payable after 180 days is this amount. So we
77.
will have to hedge that amount along with the additional expenses. I thought like that.
No. This is the option one. Option two, you pay whatever is the S1 on that date.
Oh, okay,
All
sir.
right.
Okay.
Sir, excuse me, sir.
Yes, tell me.
Sir, even I also did the same thing. I added because extra 30,000 if they are ready to pay in that question it is there. No, so I thought with the second requirement we can add 30,000. I did that only. Same thing.
Okay. Second requirement, ideally the 30,000 has to be added because they're saying if you want to hedge, an extra expense will come over there. But it is not a part of the solution. They're trying to compare with S1. You got it. So even if you add it, I don't say that your answer is wrong. Your answer will be correct only. Because that's how they have given in the question.
Okay, sir.
Okay.
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 Sir, one more doubt, sir.
Yeah.
I got that in the second part, I got 11 lakh 66,665. But after that, how it came to 11 lakh 70 something?
That is because the LC commission is
Yes,
LC
added.
commission
I
charges
have
will
got.
also come, right? This will also come.
That additional charges is on what, sir?
This is on the LC charges. They are taking LC, right? So they have an LC commission of 1%.
On the commission 2%, we need to calculate, is it?
1%. That's 2% for 1 year. So for 6 months, it will be 1%.
That 1% is on what?
One on the loan amount, $15,000.
That only I have got. Okay, sir. Okay, I have got. Thank you. Thank you.
Thank you. All right, friends. I will upload the answer. You want me to upload it right away now? Okay, then hold on. Let me upload it right away now.
Sir, all the 6 answers, all the 6 question answers we can get, no, sir?
Yes. All these answers you will be getting.
Please, sir. Thank you.
I'll do it right away now. How do I save it? Save option is only not coming. I have uploaded the answer, okay? Upload. Done. Okay, can I go to the next part now? Okay. Yes, friends, let me quickly go to the next one now. Not in the what's in the app. It's all available in the app. Even the question paper is in the app only, right? Okay, so question number 3 now we will take. Friends, question number 2A. Friends, this question is a question on free cash flow method. Value of any asset is nothing but present value of future cash flows. So you have to work out the future cash flows. You have to take the discounting factor and then you have to take the present value. Am I right?
Sir, this question took for calculation itself time gone, sir.
That's how you have to practice on this one. Revenue
Yes,
is given, cost of goods sold, operating expense, excluding depreciation, EBIT, reduce tax, EAT, add back depreciation minus capex, less additional working capital will give you the free cash flows. So total, how many marks for this question? Let's check. This question has come for 8 marks. For the free cash flow workings alone, you can take 3 marks. Free cash flow, this one, that is this working note, you can take 3 marks. This one.
Sir, I get the answers correct.
Sir, I
Fantastic.
have doubt.
Who
But
got
in
the answers
between,
correct? Monica, you got it correct?
Monica, yes, sir.
Fantastic,
This one is
Monica.
correct.
Yeah.
Sir,
Tell me.
sir, I have doubt. In this question, in the requirement section, it has given like calculate the value using free free cash flow and WACC, right?
Correct.
So what both are same, right?
Free cash flow is the cash flow
Valuating.
attributable to equity and debt holders.
Okay, sir. But in this question, there's no details about this thing, no? Interest or
So in that case, it is free cash flow only. Correct.
no, sir. That's not my question. What I'm asking is, if you go to requirement, value of Ally Limited using
Using-
free cash flows to the firm and WAC metal. Why they have given it as two things when they both mean the same?
Ideally, it is the same thing. I don't know why they have given it. If it's a free
Yeah,
cash flow
I
to
got so
firm,
confused. I was stuck there for 5 minutes. I thought there's something very new over there. I didn't know.
ICA knows how to confuse all of you. Yeah. Okay. Right. Now listen. Okay. So Monica, you've got the right answer over here, right? 2360, etc. Let's cross check all that. Yes. 1095, 1302, 1548, and 2136. Then they have taken the present value. I think the WACC is already given in the question as 15%.
Yes.
They have already given directly, is it? Perfect. So it's easy from there. Then you just have to take the present value. So you have to use two-state dividend discount model. Present value of normal cash flow, present value of perpetual cash flow. All right. Like that, you get the value as 23,040. So I think you can give total how many marks for this problem? 8 marks, right? So free cash flow 4 marks, present value 4 marks. Like that, you give total 8 marks. Monica, how have you done it? You have got 30,522, Monica. That's the present value. But after that, you should get 23,040. Yes, you have got the right answer. Perfect. Very good. Parvati,
Thank you, sir.
terminal value alone being wrong, you can deduct 2 marks, 1 or 2 marks. Deduct 2. Will be a little bit more strict. Okay. Deduct 2 marks, Parvati. Perfect. Shall I go to the next question now? Ready. So this is done. Question number B. It's an export oriented unit expecting a receipt of some particular amount. Following information is available on 1st May. Oh, fantastic. Friends, exact same type of question I've done in my class, only numbers are different over here. Okay. You have 3 requirements: forward, future, no hedging. 3 marks up. That must be a mistake, friends.
It should be 10 marks, sir.
That's a mistake. So sorry. What is the total marks we have given for this question? I mean, it's overall paper, 70 marks, is it? Do one thing. 70, right? You make this 13 marks here. This is a very, very big question. Make it 13 marks. Okay. In this 13 marks, you give 2 marks for forward, 2 marks for no hedging. So balance, how many marks is there? 9 marks will be there. The 9 marks you give it for currency futures. Okay. Please make it 13 marks and make the paper out of 80. Okay, friends. I believe all of you are done writing this. You can find it in the application in the batch. Mentoring batch, it is uploaded. Mridul, it's uploaded in the batch. You can go and download it yourself now. You're there in the app, right?
Sir, where we found this mock test in that, sir?
Come again. Yeah, wherever you saw the mock test, right? You click on mock test, 1 minute. Okay, wait, it's not yet uploaded. Hold on, hold on, hold on. I don't know what's happening. How do I add the assignments here? Wait. I'm attaching it again. Please confirm whether you're getting it. Uploaded. Yes, it's there in the app itself. All right. Now, can I go to the next question? Question number C is a theory question. Swaptions can be applied for speculation purpose or to hedge a portfolio of their swap book. What are the other areas of application? So friends are asking you for the, wait, we were doing that question on forward future. No, sorry friends, I forgot. So here you will get the number of contracts. You don't have to do it like this, okay? This is the way your textbooks have done it. In my class, I have given you 4 steps for future receivable. Number of contracts, sell future, buy future, sell spot. Am I right? So here you have to first do the number of contracts, draw the chart. In that chart, you will have 3 layers. And from that, then you have to go to the next one. So ultimately, after doing everything, you get the receipts as 190 lakhs 31,044 under futures. Under forward, they're getting the answer as 195 lakh 12,000. They haven't even done no hedging over here. How do you do a no hedging, friends? You will take the amount receivable. How much is the amount receivable? $240,000.
240,000.
And then you will
Spot
take this rate, current 0.0126 as a spot rate. Okay. Just
Sir, can
divide
you
with
show
that
me
and
the
you will
solution again, sir?
come again. Yeah. This is the solution.
Sir, I think you uploaded the question paper again as a suggested answer. Yeah.
Yes, sir.
Okay.
Actually, it's not the solution. It's the question paper again.
Is it? Oh God. Hold on. Okay. Wait. This is the question. This is also the question, is it? Something is wrong. I'm not able to save this file. I don't understand why. The solution only, right? This one? Yes, it's a solution. Since I have a train to catch at 9 o'clock, so I'll go a little fast from here. Okay, I'll just upload this again. Okay, it's here. Okay, I've uploaded now. Please confirm. Karthikeyan, I believe I've already approved your request to the mentoring program. If not done now, I'll do it. It's already done just right before I started. I have done that. Let me finish off with this answer paper first, friends. Then I will do other part because I want to complete this entire thing. So I think question number 2A is done, and I think forward future is also done. Correct? Next question is on swaptions. This question has come for 3 marks. It's more of a theory problem, and they're asking you what are the areas of its application. Okay, so I'll just take the suggested answer and I'll just show you what are the points given. Friends, swaption is the combination of swaps as well as options. Okay, it is basically useful for multiple purposes that are given over here. It can be applied for variety of ways of both active traders, useful tool for hedging, targeting an acceptable borrowing rate, etc., etc. All right, these are the applications of swaptions. If you want to get to know more about this, coming Saturday, I'm going live 2 to 5. I'll be doing the new syllabus important theory. I'll be covering swaptions also over there. Okay, right. I did save changes. Please confirm. Yes.
Not reflected, I think.
Okay, just check now. Okay, friends. Can I go to the next question now? Question number 3A. This is a question on which you're supposed to calculate it's a question on portfolio management. They have given you the number of share, face value is given, and they have given you the market price of the share also over here. And they have given you the dividends and the probabilities. So based on this, I have uploaded the question paper again.
No, sir, we got the answer.
Answer only, right? Okay, okay. Okay, fine. So friends, let's just cross-check this part now. Okay, so this question, the solution goes as follows. See, first you need to find out the expected market price. How do you work out the expected market price? That will be outcome into probability. Am I right? So when you do outcome into probability, you got 228, you got 318. That is the first part. Let's check whether Monica, you have done it like that.
Yes, sir.
Yes, you got 220,
me,
you got
sir.
318. Yes, tell me.
So sorry, sir, I'm like slightly backward. In question 2B, we
Yeah.
have to take we'll sell futures as on 1st May at 0.0125, sir.
No, you don't go by how they have done it. You do it the way I have taught you.
Okay, because I
Sell-
want to check there is no gain, no loss there. Actually, both the future price and the cancellation price is the same there.
No, you ignore these steps. Do it exactly how I have taught you. Sell future at F0. But then buy at F1.
Okay, sir.
You will get
That's
a
what
gain
I
or
want.
loss. Do it in my method and you do it. All right?
Okay, fine, sir. Thank you, sir.
All right. Okay. Yes. So here you get 220, you get 318, and then they have given you to calculate the return. How do you work out the return? P1 minus P0 plus D1 divided by P0. So they have taken the dividend, that is D1. They have taken the capital gain, that is P1 minus P0 divided by P0. So like that, they got the answer as 10.48% and 11.38%. They have taken the weights of the portfolio and they have got the weighted average return as 10.85%. Monica, have you got that answer? Yes, I think 10.48, 11.
But weighted average part, how much market?
That's based on the weight. So you have missed out to do on the weighted average part, is it?
Yes.
Yeah, I
Make
don't
sure you're
think in the
rounding off is
question
okay.
we asked for it, sir.
You can deduct 1 mark for that. Okay.
Okay.
Sir,
Yeah.
if anyone got the 2B answer right, can anyone like upload the answer?
Yeah.
Like
2B, can
properly
someone
done
please
answer?
post the answer in my method in the group, friends? Can you please do that? That's the method in which I do it in my classes. Sell future, buy future. That's a very logical method. This might be confusing. Can somebody who got the right answer please post it in the group? Even just send a message in the group also. If you don't get it, I will arrange it for you. Okay.
Yes.
So you get the answer for the first one as 10.85. I think that's all that they have asked, is it? Nothing else? Okay. And what is the marks for this question?
5 marks.
Sir,
Yes, tell me.
sir, for 2B, I get a no gain, no loss, sir. Is that right? By normal.
Even I got the same.
In
And
2B answer.
I got 0 gain or loss.
Ideally, that will come. You should not get a 0 gain or loss. You will get some gain or loss because the prices are fluctuating, right?
No,
Rahul,
sir,
can you
not
please upload
fluctuating.
your answer over there? Rahul, are you there?
Sir?
Sir,
Can-
excuse me, sir.
Yeah, tell me.
Sir, for question number 3, part A, answer Answer is, you please explain, sir.
Question 3, part A.
Uh,
Question 3, part A, it's the weighted average, outcome into probability.
what is, for PK, what is it?
The answer what we got is 228 and 318. You get 228 and 318. Are you clear, Ramya?
No, sir, I have got some other thing. Okay, I will check, sir. Thank you.
Cross check. All right. Yes.
Yeah, I have got.
You got it,
228,
right?
320. I have got.
Okay. Fine. So friends, do one thing. Total marks is 5 marks. You give 2 marks for requirement 1 and give 3 marks for requirement number 2. Okay.
So here, the weights are based on market value.
Yes.
Okay, sir.
It's
Thank you,
always
sir.
based on market value. Okay.
Okay.
Okay. Fine. All right. Fine. Now we'll go to the next question. Here they have given the name of the company, number of shares, beta value is given, price is given. He wants to hold the investment till the end of September with an expectation of huge dividends. On the date of investment, Nifty futures are quoting at 1,75,000, tradable at a lot of 50 per each contract. You are the investment advisor. Please advise Mr. P how to hedge his market exposure using the available data. So friends, how do you do a perfect hedging? Can you tell me? S0 into beta into 100%.
100%.
Okay, so when you do like that, I'll just tell you what answer you will get. Hold on, I have opened multiple. Okay. So if you do it that way, they have done S0 into beta into 100% divided by the contract size. So I think they are getting one contract. So once they get the one contract, next requirement what they are having is Nifty future goes up by 10%. So friends, when the Nifty future goes up by 10%, my security has a beta of 1.25. So tell me friends, my security will go up by how much percentage? It will go up by 12.5%. Okay. So that's why they have taken 1.25 into 0.1. All right. So whatever is the loss you get in Nifty, you will make the same gain in the other points and your net gain or loss will become 0. This again, you can do it. They have given 1,75,000 as a contract size. Yes, correct. In the question it's 1,75,000, but in the answer they have done it using 17,500. Is it? Parvati, is that what you're trying to tell me?
Yes, sir. Yes, sir.
Okay, then it's okay. You take 1,75,000 into 50, you will get the number of contracts as how much? 0.1, sir. 0.1 you will get. Okay, then I have told you once you get the number of contracts, you are not worried, you're not bothered about to use the contracts anywhere. I have told you this, correct? That's okay. Instead of 1, you would have got 0.1. Give yourself full marks for that. No worries. Okay.
Sir, I just took like 50 units are in just one contract, so I just divided by 1,75,000, so I got 5 contracts. Is that right? Like
No. That's not correct. That's not correct.
Oh.
All right. Yes. Fine, friends. Normally, it's not possible that Nifty. What's the next last requirement over here? Is it possible stock as well as Nifty to raise and fall at the same percentage? No, because of the beta. If the beta is 1.25, market goes up by 1, the security will go up by 1.25. So you're having 5 marks, give 2 marks for the first requirement, 2 marks for the second requirement, and 1 mark for the third requirement. Monica, have you done it correctly?
No, sir, I didn't do the
I think you
problem.
didn't do that problem. That's fine.
I did.
Yes. Can I
Sir,
go to
I
the...
did in the chart format that you explained it to us. Is
That's
that
enough.
okay?
That's enough. That's enough. Okay.
So where can I find that question, sir?
You can get in the app.
No, sir. In our class and SM, ISM.
Which chapter you're talking about?
Yeah, this question, sir. Where can I find the similar
Futures.
question?
I've done it in futures, perfect hedging, in the chapter of futures. Okay.
Okay, sir.
All right.
Sir,
Yeah.
one more doubt.
Yeah.
So I did it a little different way, but I don't know if they will give marks for this. So I'll just explain.
Please tell
Just
me.
go up. The B part is there now, sir.
Yeah.
It has given like 35,000, right?
Correct.
So what I did is that I multiplied the futures into 0.05 or 5%. And for the stock, what I did is that I did the same and I multiplied by 1.25. But they did it in a reverse way.
That's
One
okay.
is
Both
the
will give you the same answer only, right?
answer is 0 only, but I don't know if they will give marks. That's
They'll
the
give you marks. But just explain the logic. Why did you multiply 1.25? Because the beta is 1.25.
okay, sir.
So 5% into 1.25 will give you 7 point something percentage. Am I right?
Yes, sir.
That's correct. Nothing wrong. Okay. Yes. So let's go to the next question now. That is question number C is principles of technical analysis. This is done in my recorded classes, friends. Market discounts everything. Price moves in 10. History tends to repeat itself. It's a 4 mark. Preferably put 4 points. Okay. They have given 3 points here, but you write 4 points. Every 1 point will get 1 mark. All right. Now we'll go to question number 4. Mutual funds. Friends, this exact question we have done in our class. In our regular class, also in my crash class, also I have done this. Okay. So basically, they have given mutual fund ABC. They are missing out on some documents, and the answers goes like this. Units are 20, 20, 20. Value of investment is 2 lakh 10, 4 lakh 56, 4 lakh 16. Yield is 8 minus 3.8 and 8. Number of days is also worked out like this. 300, 124, 195. Date of original investment. Yield is 2.63%. There are 7 requirements. How many marks? 6 marks, is it? Let's make it 7 marks, friends. Or let's keep it at 6 only. 6 would be, you can do one thing. Give half mark for requirement 1 and 2. Half. Remaining all points, you give 1 mark each. Half, 1, 1, 1, 1, 1. Oh, then also it's 7, correct. 5 and 6, correct. So half mark for 1 and 2 and rest everything 1 mark. All right.
Sir, I didn't total that investment. Second question. I didn't do that total part. How much mark should I award?
Total part means you didn't write the 29,000 over there, is it? Sorry. You didn't write the 10 lakh 82,000 over here, is it?
Yes.
That's okay. That's okay.
Individually, I got the value.
That's okay. You will not lose any marks for that.
Okay, sir.
Sir,
Yeah, tell me.
sir, I got the dates, every date previous to the suggested
Yeah,
one.
that's okay because one is inclusive, other one is exclusive. That's also correct. Nothing wrong in that. You would have included the 31st March, they would have excluded it. That's why the difference is coming. That's okay.
Okay.
Sir, we should show the total, sir, for each mutual fund. I just gave it for A, B, C separately. That's it.
Separately is enough. Separately is enough. Okay.
Thank you, sir.
Thank you. Now I'll go to question number 4B. Okay, this question again, friends, same type, different numbers done in class. Free cash flow to equity method is the question. Am I right? So 560 crore, 1900 crore. From this, you will be able to find out the number of shares. Then you will do EPS. You will find out the KE, and then you will do FCFE. And doing free cash flow to equity, it will be attributable to equity holders. And finally, you will get the price as 287.25. Monica, have you done that?
Yes, I have done that. But that last computation error I have made.
Okay. It's gone all topsy-turvy.
Error
Monica.
2.8. I have to.
Okay. Please cross-check and give yourself mark, friend. This question, if you write it correct, you get full marks. There is no mid marks in this. 4 marks in total. Or if you want to give mid marks, you can do it like that. For finding out KE, you can give yourself 1 mark. KE. Free cash flow to equity, you can again give yourself 1 mark. Valuation, another 2 marks. All right, friends, I'm going to the next part. I have a train to catch, so I have to pack up soon. I'll be packing up in another 5 minutes. We have how many more questions to do? We have 5A, 5B. 2 more problematic questions, right? Okay. 5A, this person has invested 3 crore in the following shares. They have given you the beta of these securities. If Mrs. Siri invests in equal amount in all securities, what is the overall beta? So you have to do beta into weight. If he's investing 15% here, 15, 10, etc., then again you have to find out the weighted average beta. If the expected return of market is 12, beta is 1, what will be the portfolio's expected return? That is CAPM, RF plus beta overall into RM minus RF. So you'll have 1 beta overall in situation 1, 1 beta overall in situation number 2. If the company changes its policy to invest in any 3 securities with a minimum of 20% each, you are requested to advise the company to have a right mix. That is, invest in 3 securities, the minimum of 20%. So SKP will be 20, 60%. Remaining D and C, you can invest the remaining 40. So beta of 2. So when there is a bull phase, market goes up by 10, this will go up by 20. Put your remaining money in D. If there's a bear phase and the markets are falling down, in that case, you are supposed to invest your money in C because it is having a lower beta, or you can put your money in P also because it's having a negative beta. Let us check the solutions now. So they have taken the overall beta as 0.98. If you put equally, if you invest in 20, 20, etc. weight, you get 1.155 as a weights over here, friends. Case 1, after taking 0.98 as the beta, they have got the return KE at 11.76, 13.86. Yes, in bull space, as I told you, put your entire money in 60 because the beta is 2.
Sir,
Yeah,
how did we get these weights, sir? 20, 20, 60?
it's given in the question. 20, 20, 20. It's 20, 20, 60, is it? Okay. Okay, what they have told is when it's a bull phase, they are saying that you sell off this because it's having a negative beta, right? Sell off this also and invest in D. That's what they have done over here.
Yes, sir. Excuse me, sir.
Yeah, tell
That
me.
bull phase, bear phase, that please explain again, sir. I couldn't.
Bull phase means the price is going up, correct?
Yes, sir.
So when
Yes,
the
sir.
prices are going up, it's better to invest in stocks having higher beta because you can make more returns.
Oh, but risk is also higher. Taking
Correct.
risk, we need to. Okay,
Correct.
okay.
Correct.
Fine.
So that's why this being a negative beta, they sold this also, they put that money also in D.
Okay. For bear phase means?
Bear phase means prices are falling down, correct? So what they did is they put the money in negative point, they put 60.
Okay.
And here there was a 20, right? They withdrew this 20
Then
and they have,
how to design that 60%, sir?
it was actually 20, 20, 20. Am I right? Okay. 20, 20, 20, and then there is 20 and 20. Am I right? So what they did is security of K and D, they have invested to P. That's how they made it 60. But ideally, they can put the entire money over here. I'm not sure why they did like this. 1 minute. You're required to advise the company, right?
3 securities and minimum of 20 now, sir.
Yeah. Invest in any 3 securities, minimum of 20. Correct. That's why. So any 3 minimum 20. So if you see 20 here, 20 here, and 60 over here. Correct. So when you see bull phase, maximum betas. In 2, you have put 60. In 1, you have put 20. 1.6, you have put 20. And again, 1, you have put 20. So minus 0.30, 0.60. So you are putting money in the highest betas. And when it's a bear phase, when the market is falling down, you have put your money in minus 0.3 maximum, then 0.6, 20, then 120. Like that they are putting. So any
when it is bear market, the concept should be like I should short sell the shares, sir.
Correct.
Like how we should think.
When the market is bear, prices are falling down. So when the prices are falling down, if you put it in high beta stock, your money will fall down even further.
Okay.
So instead of that, you put it in low beta stock. So that if market falls by 10%, my security will fall by only 0.3%.
Okay.
Got it? Okay.
Done.
Yes. And friends, the last question.
Sir,
Yeah, tell me.
sir, നമുക്കിപ്പോ ഇവിടെ അവര് ഏറ്റവും കൂടുതൽ 2 സ്റ്റോക്ക് മാത്രമല്ലേ അവര് ഡിസ്പോസ് ചെയ്യാൻ ഉദ്ദേശിച്ചിട്ടുള്ളൂ. അത് ലൈക്ക് എക്സാമിന് നമുക്ക് എങ്ങനെയാ സർ ഇത് എത്രണ്ണം ഡിസ്പോസ് ചെയ്യണമെന്ന് അറിയാം?
അല്ല ക്വസ്റ്റ്യനിൽ പറഞ്ഞിട്ടല്ലോ 20 in 3 minimum 3 securities should have at least 20 എന്ന് പറഞ്ഞിട്ടല്ലോ.
Okay, sir. Okay, sir. Thank you.
In any 3 securities minimum 20 വേണമെന്ന് പറഞ്ഞിട്ടുണ്ട്. Okay.
Okay, sir. Thank you, sir.
Thank you. Yes, friends. The last question is on Srinidhi. She's talking about constant ratio plan. Friends, we have done exactly the same question in class. Okay, constant ratio plan. So you'll put 50% in, aggressive, 50% in conservative. So then you will, after that, you will do rebalancing. Every time the stock is going up or coming down by 10%, you do rebalancing. Exactly the same question is done in my class, friends. Okay, buy, sell, etc. Just go through this. This table, if you get it correct, you get full marks. Okay.
So how much should we give for this first part, sir?
Here, it's total 6 marks. Okay. So I think the moment you draw the table, you should get the entire 6 marks.
The second part of the question, sir.
They're asking whether there's any errors developed, technique developed by Srinidhi. If so, briefly explain. Let's check if there are any errors.
So this answer seems slightly illogical, sir.
This is the methodology we have done in the class. Are you my regular student? Sankirtana, you're there, right?
Yes, sir. Yeah, and I don't mean that, sir. I mean the answer given here for the second part, because in this strategy we have got 5,56,000. Under buy and hold, we'll get only 5,50,000. But they are telling though the cash flow in buy and hold is more, they are telling them.
It must be a mistake. It must be a typing error over there.
Okay, sir.
Ignore it. All right. Yes. Friends, remaining are all theory problems. Now, based on this.
So this question is not in the paper, no? In your
Not
material.
in the paper?
Yes, not in the material, your material.
Which one?
The last one.
5, you're talking about 5B?
Yes, sir.
5B is there. It's there in mutual funds.
Okay.
Sunidhi, the name is Sunidhi. They have made it Srinidhi. That's the only difference.
Okay, sir.
All right. Yes. All right, friends, I have to rush now. Can you please, based on this, give yourself marks and send the marks in the group? Can you please do that? Last 3 are theory problems. Let it be how much ever, or you message me personally if you feel, in the group you are not very comfortable, send it personally to me. But please send me the marks. Can you please do that, friends? All right. Perfect. Excellent, friends. Excellent. Put me in percentage, okay? That is out of 80 or 70, whatever it is, give me in percentage. Okay. Fantastic. Okay. Thank you so much, friends. We have more mock papers to come. Unfortunately, I'm traveling right now, or else I would have spent a little bit more free time to elaborate on the concepts. Excellent, Aishwarya. Keep it up. So I'll pack up now. I will see you very, very soon again, friends. Study well. Keep writing this mock test. Kevin, 71% is fantastic. Keep it up. Fine. Take care, friends. Have a nice time ahead. Take care.
Take care, sir.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you, everyone.